Should you drain your 401k to pay off your credit card debt? How do contribution limits work? And should you get a 50-year mortgage? Let's find out right now. Welcome back to the Personal Finance Club show. Hey, Jen.
What's up, Jeremy?
So as you may know, Jen and I live on different portions of the internet. Although we did discover recently we have one podcast in common. Wait, don't tell me is a podcast we both have listened to. But our Instagram feeds, our TikTok feeds tend to be very different. And so we played this game once before, which is Name That Celebrity, where I showed Jen 3 people who are very prominent in my sphere of pop culture influence. And she showed me 3 people, and we just tried to figure out. And I think I was 1 for 3, and you were 0 for 3. So we're collectively 1 for 6.
Dang, it's cumulative. Can we start over?
Well, no, collectively as a team, we were 1 for 6 last time. We're gonna see if we can do better than 1 for 6.
So we're playing on the same team?
Well, just to see how much our circles overlap.
What I hate about this is there's no way to study the internet, and the people are so vast. I just can't. I just have to hope that somehow I know someone.
No, you have to just go pretend to be me on TikTok for an hour and be search computer programming and borderline autism and whatever best describes me. And
then computer programming, is that a hint?
I don't know. I'm just, what do you describe? How do you describe me? Tall, white, dumb-looking guy? I don't know.
Okay, so am I going first or are you going first?
I'll click your celebrity first. How about that?
Okay, so you're gonna do my without context,
right?
So should we explain? We have one picture without context, one picture with context. So is it we're trying to get it without context, and then if we can't, we click on the next one?
Yeah, we'll see when we can get it. Because last time wasn't really fair because Jen gave me more hints in hers and I gave her in mine. So now we're trying to make it more fair. So I'm going to look at this picture without context to who they are, what they do. And here's the first picture.
Yep. Describe what you're seeing.
This is a black man with a gold cross chain and a bandana and a kind of a headband around his head. He's wearing a big black leather jacket. I have no idea who this is. I don't think I've ever seen this person before. I mean,
Do you want to look at the one with context and then take a guess?
Yeah, for sure. I want to look at, right now I have no guess. Just knowing you, I was like, maybe he's a musician. He's got a gold chain. Maybe he's a rapper. I don't know.
Okay.
Could be an athlete. I don't know.
Okay.
Could be a scientist. I don't know. All right. With context.
With context.
Okay. Oh, wait.
I blurred out something so that you wouldn't be able to see the name. But the context, explain what you're seeing.
So this looks like the cover of a CD to me, like an album cover. And there's some words, I think. I can't really read them. It just looks like is this like the rapper who was shot in the 90s? Tupac? Is this Tupac?
Oh my God. Wait, I'm dying. I told my best friend, I said, I'm going to put this one up. I feel like Jeremy's going to guess Tupac. It's not Tupac.
It doesn't. Well, because he had the band. There's a picture of him with the bandana. It doesn't look like his face.
I can see where you got there. All these pictures are older too, so they definitely ran in the same circles. But it is an album cover. Do you want me to tell you who it is?
Yeah, tell me who it is.
It's D'Angelo. Do you know who that is?
No.
D'Angelo's a singer. He's an R&B singer. He actually just passed. He had pancreatic cancer. R.I.P. King. He's one of the greatest songwriters of all time. He worked a lot with Questlove, who you do know.
Oh, yeah.
From The Roots, who's on Jimmy Fallon.
Right.
So Questlove is the drummer on this album and pretty much all of D'Angelo's albums. He's just a prolific songwriter that worked with Erykah Badu, who you didn't get last time. He worked with a lot of amazing artists. Stevie Wonder, he's amazing. And R.I.P. King, he's also really fine.
I agree with that, but I'm sorry for his loss. But man,
do you know? Maybe from this is probably, I forget what year this song came out, sometime in the 2000s. He put out a song called "How Does It Feel," untitled, and it was a very controversial video because he was naked in the video supposedly, but it only went down so far. And he was super over-sexualized, so he left the music industry for 15 years because he was everybody's just trying to hunt me down. All the women are all over me. And so he just left for a while, came back, released one of the greatest albums of all time, Black Messiah. And now he's gone.
I don't know. Don't know him. I don't know music. if you show me musicians all day, I will not know any of them.
Dang,
So
Jeremy.
my bad.
Okay. All right. So
All right.
I'm doing yours.
Yeah. Number one without context.
I know one.
I thought you might know. I think this might be the easiest one for you. I don't know. We'll see. Who is it?
What I love. Okay, so I will watch me get it wrong. Is this Hank Green?
It is.
Okay, I listened to I watched a podcast the other day with Josh Johnson, who's one of the new anchors on The Daily Show, and Ashley Gavin. They're two comedians, and they had him on. So I think that if I had seen this even like 3 weeks ago, I wouldn't have known. But now I know what his face looks like currently.
That's funny. Yeah, he's like a super huge like OG YouTuber, super huge on TikTok. And honestly, like I didn't even really. He's kind of like a modern day Bill Nye the Science Guy.
Yeah,
and,
yeah.
But also, I feel like he's one of those people where like to some people he's like the biggest person in media, and to some people like just never even heard those words together. So
he seems cool, and he promoted some. I should probably like know it, but some product where he like gives all of the proceeds, like it's like do.com or something like that, and he just like gives all of the money to charity. He doesn't take
he seems like an extraordinarily good human, and you know, kind of angers me that, you know, why can't I be that good?
Well, you'll get there.
But yeah, or inspires me, however you look at it. But,
okay, I'll look at the one with context. Okay, you got to sign up now in order to be one. Okay, so that was like the context that you gave me. I don't know if it's much. Well, context.
It's like he's just a YouTuber who's like in his studio doing YouTube stuff. So I couldn't really find how much better context you have. I don't know. All right, let's move on.
This next one, I kind of feel bad because you're not going to get it.
All right.
You made mine really hard last time, so I had to do one that was really hard.
All right. Here is a very fancy-looking black woman with short hair and a crazy, extravagant dress. It says Bazaar on the top right, which looks like some sort of fashion magazine. You are just picking things that I'm like never going to know.
You don't even know what Harper's Bazaar is. That's great.
Don't know what that is. Yeah, it's all red. I don't think I know this person.
Okay, you want to go to context?
Yeah, I'm going to see if with context if it helps. All right, now she's with some white dude with curly brown hair, and she's wearing a very sheer, sexy outfit. Don't know who that dude is either. Looks like they're in a romantic relationship. This might be like one of those, are they siblings, or are they dating? Except I don't think they're siblings in this case.
Yeah, okay. Any wild guesses of like what they might do or what she might do or be?
I don't know. I have to say they're musicians again because I don't know them. I don't know what else unless they're in fashion or something. I don't know. You just gotta tell me. I have no clue.
Okay, so this is Olandria Carthen. She was the third runner-up on this season of Love Island. But okay, context is that she has blown up since leaving. Like, she didn't win, but her and Nick, who coupled up during the season, have blown up. She is like, she was just on the cover of Vietnam Harper's Bazaar. She's been in Ebony magazine. She's been like People's Choice Awards winner. Like, she has been blowing up ever since. There's lots of controversy around her involvement. But she has been speaking out for like HBCU since she won, and like has all these partnerships where she's taken her brand, and instead of becoming like an influencer, she's totally blown up. And I love her. I'm obsessed.
Good for her.
The guys,
never heard those names.
The guys, Nick fans, they're Nicolandria collectively. That's their celebrity name. Nicolandria Hive, stand up if any of my Love Island girlies are in the chat. Shout out. I want to say that I watched this season because I did have a couple of songs in this past season. However, I would have watched it anyway. I watched last season.
Wait, you had songs that you wrote on Love Island?
Yeah.
What? That's the headline here. That's amazing.
This is what I do.
Wow, dang, Jen, you're like you're a celebrity.
I should start shouting out like what songs show is my song in. Yeah. On November 20th, I'll be in the Kardashians.
What? Get those plugs in. That's incredible. Way to go.
But yeah, I want to blame it on that, but I really would have watched anyway. I watched last season. I didn't have any songs in that season, so It was such a good season. So
I've never seen an episode.
Sorry. I mean, I had to give you a tough one. D'Angelo was in the news very recently. He died like a month ago, so I thought maybe you would have seen him.
No, I mean, there's a chance. You know, I'm more likely just in the influencer world. But all right, let's move on.
Okay, we're moving on. I'm doing
Celebrity 2 without context.
Without context. Okay, I'll make sure I'll click on the right one.
This one's a little hard because I don't think he even really looks like himself in this photo that much. But just he's so iconic.
He's a black man with a nice watch and a nice suit. I want to say soccer player. Let me look at your face. Oh, you're nodding. Okay. I
know
don't
it's
know.
a good
From
guess.
this picture, I don't know. So I have to go to
Okay.
context. Let me go. Oh! He is a track star. It's not Usain Bolt, is it?
It is.
Oh, baby!
I was like, athletics or something. Like, maybe we have an overlap, and then track. Obviously, that's my sport. I ran in college. This is like the most prominent track and field athlete in history, I think, and maybe one of the most well-known athletes on planet Earth.
Nice.
And yeah, he's very hard to recognize without context because he's just so iconic in his like Jamaican jersey and everything.
For sure. And I feel like I've only seen like action shots of him. So yeah.
Yeah, no, I mean, like, why would he be in a suit?
Yeah. Okay, sweet.
So I think you're 2 for 2 and I'm 0 for 2. So I've already lost this round. But as a collective, we've already improved on last time.
I like the idea of us working together. Okay, so you're gonna go. You're on number 3 for me.
Yeah, number 3.
I think that you'll
context.
get this one.
I hope so.
I think so. Try to make it a little bit easier. Let's see if you know.
Oh, I know her. I don't know if I'm going to think of her name. So she's a theater actress and singer in the show Wicked, and she plays. I've never seen Wicked, and so, but yeah, she's definitely been all over everything. And so
I thought that you might know like what she's from, but not necessarily know her name.
Yeah, I would even know her name. If you gave me like 3 options, I'd be able to know it. I'm sure that context is very contextual. The green face kind of gave it away. Although honestly, since I haven't seen Wicked, actually, I think I recognize the first one more just because I've seen her. She's
really so you don't know the character's name. Take a guess.
Glenda Elphaba.
Yes!
Is it Elphaba?
Good job. Wow, I'm so proud of you. I'll give you this one because you got Elphaba. Right. Her name is Cynthia Erivo. She's an amazing Broadway star of Color Purple fame, but obviously recently Wicked fame with Ariana Grande and that crazy press tour that they're on. And I'm obsessed with her, obviously. She's one of the best singers alive. Okay, awesome. Let me do your number 3.
This one, your first 2 are so hard. This one I feel less bad about because I don't think you're going to get her.
She looks like, it's a white woman with like strawberry blonde hair. She looks a little, she looks like she's giving like a TED talk. She has a mic on. I don't know without the context. Let me go to with context.
If you got it from that, I'd be shocked.
Oh, okay. She's a judge, a TV judge, but not Judge Judy because Judge Judy's a lot older. I don't know. I know like Judge Joe Brown and Judge Judy, and that's pretty much it.
That's funny because this is, I did 2 of my celebrity crushes last time, Alex Honnold and Ken Jennings from Jeopardy. This is my 3rd celebrity crush, 3rd of 3. So this is all of them.
God. Okay. How old is she?
It's not, look at her. She's not that old, right?
55 minimum.
Yeah. There you go.
Okay. I guess you're old enough for that. Cougaring.
Yeah, I'm 45. Sorry, I can't do a 10-year age gap. What?
I'm going to tell Andrea. Okay, yeah, so who is she?
Being married is the bigger problem. Or not a problem. This is TV judge Marilyn Milian, who was famously the judge on the People's Court for like 20 years.
Gun to my head, would never know that name.
Yeah. Yeah. If I said People's Court, who would you say?
I don't know.
Oh, okay. Most people say Judge Wapner, but like he stopped doing the People's Court like literally 25 years ago or something.
Okay.
And she did it for 20 years up until a couple years ago when they, finally ended the show. But she's just like, I don't know, one of these people where you just watch her and she's like, she's so smart. She's like so fast. She's tough. She's mean. She's funny.
I already forgot her name.
Marilyn Milian. She's Latina. She speaks Spanish and gives these little phrases in Spanish. I used to just be like addicted to the People's Court. It's so silly. Nice. But yeah, definitely, but she's not like in pop culture these days at all. So if you weren't watching the People's Court 10 years ago.
I was watching Oprah, I guess.
All right. So I got 1, you got 2,
so we're even.
3 out of 6. Not terrible.
Yeah. Very good. Right. I'm proud of us. That was fun.
Yeah.
All right, let's get into the actual show, I guess.
Yeah, let's do actual personal finance.
Okay, let's get into Explain It Like I'm 5. Our subject today, contribution limits. I'm just going to leave it there because I feel like you have a lot to say. I'm going to let you dive in.
I do. Contribution limits really often confuse people. And so I'm going to start just talking about bank accounts and then we're going to get to and explain like I'm 5 analogy. And I think maybe if we go in order, it'll all become more clear. And so if you go open up a savings account or a checking account, most people understand this. Go to a bank, you open up an account, you can put cash and you can put cash out. No one ever worries about contribution limits here. If I go put in $10 or $100 or $1,000 or $1 million, that's no problem for your bank account. And actually, at one point, I did actually contribute, $2 million at once all to a bank account. And I called the bank ahead of time and said, "Can you hold this much money? Is this going to become a problem?" I don't know.
What did they say?
They're
like, yeah, happy to.
Exactly. They said, yeah, no problem. Yeah. And I didn't know that. I assume if it was like $1 trillion, that would probably set off some sort of alert. You get a phone call and be like, this is more money than exists right now. Where did you come up with this? But otherwise, there's no limits to bank accounts. Okay, so that's a bank account. But bank accounts only hold cash. If I go to my bank and try to deposit Apple stock, they're going to say, you can't do that. That doesn't make any sense. Banks only hold cash.
Right.
So enter a brokerage. A brokerage is like a bank. It's a big financial institution, but instead of just holding cash, they have different rules and they can hold stocks and bonds and ETFs and mutual funds and investments, right? And so I can go to a brokerage account and deposit cash, or I can deposit, stock or buy stock inside of my brokerage account. Brokerage accounts also don't have any sort of contribution limits. So I can, go to I'm a very hands-on person. So I can log on to Bank of America and click transfer from my checking account to my brokerage account with a brokerage. I have a really hard time saying that word. In elementary school, I had to go to speech therapy for my R's.
Oh.
Of which there is one in my first name. And so my first name, Jeremy, is still very hard for me to say sometimes. Jeremy. And I'm pretty good at R at this point, but brokerage is a really...
I've never noticed it.
I'm trying really hard. Every time I say brokerage, I brace for impact. For impact. I don't know why brokerage, because that the BR and then there's another R right behind it.
Right.
And Spanish R is no chance.
You're fighting for your life.
Yeah, exactly. So I can go transfer money from my checking account to my brokerage account, with Fidelity or Vanguard or Schwab. And that's no problem. I can move $1 million, no problem. I can put any amount of money in my brokerage account and I can buy any amount of stock or mutual funds or ETFs, right? So there's no contribution limits. The problem with brokerage accounts, if there is one, is that you pay tax on the gains. And so the government looked at the behavior of Americans and said, hey, not enough people are investing money. We want them to invest money. It's good for the economy. It's good for themselves. The more money you invest for yourself in your brokerage account, the less likely you are to be a homeless old person on the streets. So as a government, we want to encourage people to put more money into their brokerage account. So let's introduce a special type of brokerage account called a Roth IRA. An IRA stands for individual retirement account. Now every time I say R, I'm worried.
Okay, individual doesn't have any R's, and you
retirement does though. That's the R.
Now
you don't think
anxious.
I know what word has an R? All right. So a Roth IRA stands for individual retirement account, and basically the rule is all the growth in a Roth IRA is never ever taxed again. Mm-hmm. And so it's like a brokerage account in that you can buy stocks and bonds and invest and see growth, but inside of a Roth IRA, it's never ever taxed again.
Right.
And the government said, this is a really good deal because we're not going to tax you on all this amazing growth of your investments, but we don't want billionaires just putting all their money into a Roth IRA and never paying any tax again. And so we're going to kind of put a little speed limit sign on the front of this account that says, hey, you can't contribute money faster than, for this year, it changes every year, but this year, 2025, $7,000 a year for an individual, or if you're 50 years or older, it's $8,000 a year. So basically, that's the contribution limit. On this special type of brokerage account called a Roth IRA, you can only put $7,000 in per year. And sometimes this confuses people. One, it confuses people because they conflate this one contribution limit with any amount of investing, right? So one common question I get is, hey, what if I have more than $7,000? Can I invest $8,000 or $9,000? And the answer is, of course you can. You can put an unlimited amount of money into a regular brokerage account. That speed limit only applies to your Roth IRA. So you might have two accounts, a Roth IRA where you put $7,000 per year in, and then your regular brokerage account where you put in infinite amount of money, right?
Mm-hmm. Yep.
And the other thing that confuses people is how much money you can put in per year versus how much money's inside of it. So like, let's say I put in $7,000 last year, and then let's say I put in $7,000 this year, and then that's $14,000 total, and then it grows. Now it could have $15,000 or $16,000 in. And so let me give an analogy. Let's say you have a rabbit farm. This is the 5-year-old analogy. This is the explain like I'm 5, where maybe a 5-year-old could understand. Let's say you start a rabbit farm.
Love it.
And the government says we don't want there to be rabbits to grow too fast. So they say, hey, you can add 7 rabbits per year to your rabbit farm. So last year you put 7 rabbits in. This year you put 7 rabbits in. Once the rabbits are in the farm, they can do their little rabbit thing as much as they want.
What kind of wait. That's not so 5-year-old. What are the rabbits doing?
Okay, that's true. Well, baby rabbits. The stork brings them. So yeah, I guess that isn't so 5-year-old, but whatever. So once they're in the rabbit farm, those rabbits can multiply as much as they want. So like you could put 7 rabbits in last year, 7 rabbits in this year, and then maybe there's 500 rabbits in, or 5,000 or 500,000. It doesn't matter. Once they're in, that's fine. It only applies to the front door. How fast you can put new baby rabbits in, right? How fast you can like add rabbits to the, not baby rabbits, but how fast you can add rabbits to. So in the real Roth IRA, like let's say I put 7,000 in last year, 7,000 in this year, and let's say my investments had like the year of their life and went up to $1 million, that's fine. And then there's one other caveat here, which is in addition to contribution limits, there are also income limits. So the government said, hey, we don't want billionaires putting in too much money, like all $1 billion. And also, while we're at it, we don't want people making $1 million a year to have access at all, because this isn't for them. It's for regular middle income people, not super $1 million earners. And so this year in 2025, if you're single, you have to make less than $150,000 in order to contribute at all, or in order to contribute the full amount. And then if you are married, you have to make less than $236,000 in order to contribute the full amount. After that amount of money, it kind of like very quickly has this like phase out period, and then you can't contribute at all. So basically, if you're over those income amounts, like how much you make, that's your modified adjusted gross income. We're way beyond expand like a 5 at this point, but you can't contribute at all. And so basically, there's this little speed limit sign that says, hey, you can only put in 7 rabbits per year. Oh, and by the way, if you're making too many rabbits already outside of this rabbit farm, you can't put in any.
Right.
And so that confuses people also, because they say, hey, okay, I put in $7,000 last year, but this year I'm not eligible because my income has gone too high. What happens to those rabbits inside of there? And the answer is they're fine. They can stay there forever. These contribution and income limits only apply to the new contributions, how much you're adding every year. Once it's in there, it's safe, it's protected forever.
Okay.
And so
the rabbits
yeah, those basic questions. Can you put more than $7,000? Can you invest more than $7,000? Yes, just not into your Roth IRA. And then what happens? What if I am restricted based on income? You can't contribute more necessarily, although there is this thing called the backdoor Roth IRA. Stay tuned for a future episode.
Noted.
But everything that's in there is already fine. So that's what it is. It's just a way to basically slow people down and squeezing too much of their money into this really cool tax break called a Roth IRA.
Okay. Yeah, we do office hours here and there, and sometimes we have people that ask questions like, when you get to the end of the year, you do taxes, you don't necessarily even know how much your adjusted gross income will be. And, I see you generally telling people, if you're even close, don't even mess with it. Because it's just not worth it. So that's when you need to worry about it. But this is good. We broke it down. I don't know about 5. I like the rabbits.
Yeah, but Rabbits Farm. 7 rabbits per year, kids.
Yeah, busy
Never
rabbits. Forget. Okay, fantastic. Let's get into our next segment because I'm excited. Money. Can I ask a dumb one? We have an audio message today. And I think, Jeremy, did you post something on your story to tell people to send in messages yet?
Not yet, but I will.
Okay.
And if you're listening, you can DM me on Instagram or email.
podcast@personalfinanceclub.com. Wow, put me on the spot.
I am the one who always forgets it. And send us a selfie video of yourself, 30 to 60 seconds long, and we'll include your question on a future episode. We want to make this more audio and visual. And this is our first one with an actual audio. So let's listen to what The question is.
Hi, Jeremy. Hi, Jen. I am from Orlando, Florida. I'm in my late 20s and I wanted to cash out my 401k so that I can pay a good chunk of my credit card debt. So I have about $15,000 in credit card debt and I have about $22,000 in my 401k. Since I make about $50K a year, I contribute a good amount to my 401k. I'm still hopeful that even with all the tax and the penalties that it'll still be a good chunk for me to either pay all of my debt or a good majority. Let me know. I'm excited to hear what you guys have to say. And I love you guys' podcasts.
That was a 4-minute question originally. And that was the version we just listened to is 42 seconds. So we got it down significantly, but still made sense, right?
Yes.
Okay. So that was anonymous. I'm going to call her Orlando, because she's from Orlando. And basic details, she's got $15,000 in credit card debt. She said it's been around for years. And she's got $22,000 in her 401k. And she says, hey, can I just be done with this? Cash out my 401k, pay off the debt, and then start contributing to my 401k. And here's my thoughts. One, you're putting a good amount into your 401k, which is awesome. You're making $50K a year, which isn't a massive salary. It's like a good start. It's going to grow over the years. You're already contributing to your 401k. Amazing. You want to get out of debt, amazing. $15K, ton of money. But, this isn't like we don't want this to be a lifelong debt sentence for you. We want you to get out of debt quickly. That said, what I don't want to have happen, I think the worst case scenario would be for you to cash out your 401k down to nothing or close to nothing, pay off your debt, and then fall right back into the debt trap and rack up your debt again. And now you're back to having $15,000 in debt, and now you have no 401k. And so I'm very hesitant to recommend people cashing out their 401k. Plus, of course, as you mentioned, there's tax and penalties associated with that. And so you're going to pay income tax on all the money you take out, plus a 10% penalty. And if you're contributing money to your 401k just to pull it out and pay that penalty, there's like a shortcut to that, which is stop your contributions. And so you mentioned part of the audio that I cut, that you have a mesh and you're doing that. But I might say temporarily, I might do these things. One, get that raise at work. It's time to get that raise, get more income, get that side hustle going. Just like Jen, just sell some music to Hollywood,
Easy.
brand name productions.
Yep.
As she'll attest, it's a very easy, quick cash.
Easy. Just
yeah.
Click.
Yeah. Just spend 40 years in the music industry and make contacts, and you too can make $500 here and there. Hopefully you make more than that. I don't know.
I hope so too.
Okay. All right. So yeah, get that resort, get this side hustle. And I might even say, hey, stop contributing temporarily to your 401k. And so then you have what you were putting into your 401k, plus your raise, plus your side hustle, plus the minimum payments you were already making to your debt, and take all that money and you want to make big, chunky, just eye-watering payments to your debt. Mm-hmm. And so leave your 401k to compound safely, grow during this time. Mm-hmm. And then if you can scrape together $500 a month, in 30 months, you'll basically, be credit card debt free. Mm-hmm. And then if you can then turn those 401k contributions back on and then start investing that money, then your 401k, which is $22K, hopefully it'll have grown over those 30 months. Well, then you can start really making that grow fast. And if you can do $1,000 a month, that 30 months goes to 15 months, right? And so the big problem here isn't, you mentioned, okay, I can maybe get in like a low tax bracket if I do it this year, or I can maybe, this might be a good time to do it, or I might, your problem isn't that you're trying to play this little tax game. Your problem is you got to pay down the principal. And if you're not doing that with your own income, with your own cash flow, I'm afraid you're going to get back into it. And so I would say, hey, have this be if you have credit card debt you're not paying off in full, this is priority numero uno. That's my little Judge Marilyn Milian smash. That means priority number one. Uh-huh. And the only thing you should be focusing on is going ham on that. Do you know what ham means, Jen?
I know what going ham means. Go crazy. Pay it all
off. Yeah, it means
off.
go ham. It means just go absolutely ham. And, just, sell some stuff, whatever it is, scrape together this money. Because $15K, it seems daunting, but if you can make $1,000 payment against that, that's $14K. And that's a lot less. And that's
Wow,
13K. And
math.
pretty soon it's going to be 4 figures. And you're going to feel this accelerate. Then once you get that down to 0, take all those debt payments, put them in investing. That's what I would do, Orlando. You're in really good shape. You're young, you're in your 20s, you got a job, you want to get debt free, you're already doing your 401k. Kill this credit card debt the old fashioned way. Don't cash out your 401k. Crush it with your income, and you're going to be a millionaire over the course of your career. I promise you.
Wow. Okay, I love this. I love this question. I can't believe you got down to 42 seconds. It was like over 3 minutes long. And I was curious what you were going to say because Orlando was making the math sound right. You know what I'm saying? Math-wise, I was like, maybe he'll say she should do this, but
totally.
I
But
like
feel
your
like
explanation.
so much of personal finance isn't math. It's not like, oh, if I can get 1% here or there on the Excel sheet. It's like, hey, there's a reason you have $15,000 in credit card debt, and there's a reason your 401k is 22K. Like, let's focus on getting that debt down to 0, not just trying to take this like shortcut to see if we can like save 1% on taxes or, avoid a penalty or whatever. That's not the problem. It's like the behavior we want to make sure is right before we get into a worse situation.
For sure. Okay, love it. That's why they pay you the big bucks.
I make less than Orlando does here.
Okay, let's move on to our next segment. Scroll Patrol. And as you know, Jeremy is going to click on a link that he has not seen yet, a video that I've sourced from the internet. He's going to react in real time and tell us what he thinks. So we're going to click on this together.
All right, plus pressing play now.
More millionaires are made during recessions than any other time.
How do they do it?
So that's the thing, you want to find the opportunity. And the way that you find the opportunity is first to understand how you get there, because history doesn't repeat itself, but it does rhyme. And so what happens is people say, oh, this happened in 2020, so it must happen again. Or this happened in 2008, so this is probably going to happen. Or this happened in 2001. That's not how it works. You have to understand what happened and how you're getting to where you are right now. That way you can look for the new opportunity, because the opportunity is going to be similar but different. And you want to be ready when times are okay and good and prepared. That way when things go bad, you can come in and pounce on the opportunity and take advantage of it.
Okay, that's Jaspreet from Minority Mindset. I don't know him personally, but I know of him. Maybe I met him once at a FinCon or something. I think I did. I'm pretty sure he went to Michigan, where I went, so I already automatically like him.
Go Blue!
He gets go Blue. He automatically gets 100% pass, A+. I'm just kidding. I like him. I don't really know what was being said there.
That's why I got it. I was like, what is he saying? like word salad.
Right. Yeah. Look for the opportunity. It's same, but different. Have you ever been to India? I haven't actually, but my brother said that went there, and he's like, or I guess I've heard this multiple people, but he says they always say same, but different. That's like kind of a saying there. It's like, oh, you want Samsung phone, like here it's same but different. It's a Samdung phone or something. And yeah, I don't know what he's saying there. It just was like a minute and 20 seconds of I don't know yet. I thought we were gonna get to the point at some point, and we didn't. That somehow has 3.1 thousand likes on YouTube Shorts, and I don't know. Sometimes I missed it. Like
I just laughed so hard when I saw it. I was like, "What did he just say?" And I watched it a couple times.
It feels like, and I like him, and I assume like this was, there's context to this that wasn't included here, or who knows what. This looks like it's from his official channel, so it wasn't like someone like
it was a short. I will say I scrolled, through the next few shorts. I couldn't, clip because they were too good. I was like, no, these are too good. I want to get something. I want to catch him. Okay.
So yeah, I actually like Jaspreet. I like his account. I think most of what he says is great, but I just feel like that context of that was totally missing, and I don't even know how to grade that. Like we didn't get to the point. Like you look for an opportunity, okay, like how? What opportunity? What's different? What's the same? I don't know. And are more millionaires made in recessions than any other time? Like I don't know that that's true. I think that I think when there is a recession or the market's down, it's a good time to keep doing what you're doing. Build that income, pay on your debt, buy more shares. I think a lot of people actually end up doing the opposite, which is, I read a story about this actually on the Personal Finance Club Facebook page. It was, I think like April of 2025, earlier this year. The market was down, 20% because Trump tariffs, and some guy like pasted the email that he sent to his financial advisor that essentially said, the economy is trash, the sky is falling, I'm sick of this sell. It's the email that everyone sent to their financial advisor during every recession and during all of time.
Right.
Sell everything. I want to go into cash. I want to go in bonds. And I'm like, dude, the market already went down to 20%. Like, you missed it. Like, if you think it's going to go down 50, fine, but this isn't the time. The time was before. But really, the time is just don't do that. Just keep investing. And so, a good way to become a millionaire during a recession or during a down market is to buy more shares. When those shares go down 20, 30, 40, 50%, like they probably will again in our lifetime, don't get out of the market, get into the market, buy and sell. So, I don't know how to grade that because it was just a minute and 20 seconds of...
Was it really a minute and 20 seconds? It felt shorter.
Oh, I don't know. To me, it felt longer.
I love that you somehow made sense out of word salad. I'll try and get a good Jess Spreet clip for another time, but all right. We don't have to grade that one. It gets an incomplete. I
give it an N/A, an incomplete, like C teacher.
Yes,
because he didn't get to the point. I don't know what the point was.
Okay,
and it's like kind of a clever little soundbite. History doesn't repeat itself, but it rhymes. But I'm like, okay,
like, poetry,
like,
Jeremy.
Yeah, it sounds like poetry, but I still don't know what that means. So,
okay,
incomplete.
All right. Well, on that note, let's get into our last segment of the episode. Money. Jeremy had time today. We're in the comments section. I pulled a post. You put up an Instagram post recently about Trump administration's teaser of a potential 50-year mortgage. Hot topic. So you combined one of the hottest PFC topics, buy versus rent, with politics. So it was a blaze. And I pulled one of the comments, and I hope that you would have time today. So I'm going to read this comment. This commenter says, I get the concern. The interest over 50 years is a lot, but I think we're missing the bigger picture. For many buyers, it's not about the total interest. It's about qualifying and affording the monthly payment today. A 50-year mortgage could open the door for people who otherwise can't buy right now. And let's be real, no one says you have to keep it for 50 years. With the right strategy and extra principal payments, it can be a flexible tool, not a trap. It's not perfect for everyone, but for some, it's a way in. That's worth considering. And then they commented on their comment and said, I think the goal here is teaching financial literacy to people for them to make smart decisions. Jeremy, what are your thoughts on this commenter?
So, just to kind of mention the point of the post, I said, hey, if you take out a $500,000 mortgage at 7%, which is about the current rates, and pay it off over 30 years, you pay about $700,000 in interest, more than even what you're borrowing, which is mind-blowing, right? But if you extend that to 50 years, instead of paying $700,000 in interest, you pay $1.3 million in interest.
Crazy.
So you borrow $500,000 and you pay back $1.8 million. And this isn't like monopoly money. It's like actually like you're taking out of your paycheck every month, giving to the bank $1.8 million over 50 years, right? And in exchange for that, instead of paying $3,300 a month, I'm rounding here, you pay $3,000 a month. So your payment's about $300 a month less, but you pay $1.3 million in interest. And the commenter is like, yeah, but that's not the point. This isn't how people operate in the real world. They don't just sit there and pay a mortgage for 30 years or 50 years. They just try to get into a home as a tool to get a lower payment. And then something else happens, like they refinance or they sell or whatever. And to that, I actually say, yeah, that's true. In fact, according to LendingTree, most 30-year mortgages only last between 7 and 10 years because that's kind of how long people stay in a home, or that's how long it lasts before the refi. And so you're not actually paying all that interest to that one lender over the 30 years. You're getting out and then starting something else. But you're still paying the interest. And if you just, keep refining or keep moving and keep restarting the clock, you still are paying all that interest and then more probably. And so I actually have a little, you may have seen this in the notes. I don't know, but I'm going to ask you a little guessing game, and I already deleted it, so you can't see it now.
Oh.
But my question is, if you have a 50-year mortgage and you're making that $3,000 a month payment, and so you're paying $3,000 a month times 12 months times 7 years, like what LendingTree said, how long it lasts. So you pay $250,000 to your mortgage. So a $500,000 mortgage, you pay $250,000 towards that mortgage.
Yeah.
7 years later, what is the remaining balance on that mortgage? How much do you think you still owe? Because not all $250,000 goes towards principal.
Right.
You're paying interest along the way. So what's your guess? And this is the 50-year mortgage scenario. This is like the new proposed 50-year crazy long mortgage. What would your after
Okay.
7 years, how much principal would you pay off, or what would be your remaining balance?
You're 7 years in, you've paid $250 on a $500,000 mortgage, and but you've had to pay interest on that. So I'm gonna say $300,000.
300. Oh, sweet summer Jen. My sweet summer child. So you pay $250,000 towards this $500,000 mortgage. After 7 years, your remaining balance on that mortgage is $490,000.
Oh my God.
You've made virtually no progress. And so this 50-year mortgage, what it essentially amounts to is an interest-only mortgage.
Yeah.
Since these loans last on average 7 to 10 years, that of that $250,000, $240,000 went to interest.
Jesus, that's
and
crazy.
$10,000. A little thing, like less than
That's a
less than
joke.
Orlando has on credit card. It's a total joke. And so, and I think these like finance bros, I don't know if this commenter is a finance bro. He's like, yeah, but you got the leverage and you're gonna sell it and you're gonna make
I'm pretty sure
financial
this
moves.
commenter was a woman, so shout out to her for
Oh, really?
having that masculine
Okay,
energy.
all right, finance chick then. Or I don't know if the alternative is your finance bro, but I don't actually remember the gender of this person. But I agree with the commenter that they're right that a lot of times you're just looking at the monthly payment. But I'd say getting into interest-only loans isn't good personal finance behavior, because you're basically then betting the entire farm on the value of your home going up. Because like, let's say, you're essentially becoming a lifelong renter to the government, paying property tax, to your lender, paying mortgage interest, and to your insurance company, paying insurance. So you're making these huge payments. And then if the value of your home doesn't go up or it goes down, all is lost, right? And do primary homes tend to go up in value? Yeah, usually, but not always. Like my brother had to sell a home at a loss during the financial crisis back in 07, 08 timeframe.
Yeah.
And also 50-year mortgages will probably have higher interest rates. So if you look at a 30-year and a 15-year today, the 30-year has a higher rate by like 0.5% or 1% more than the 15-year, as will the 50-year probably. And so to suggest to someone they should pay more interest to not pay down the principal at all and basically get into this like very risky interest-only situation where they're hoping the home goes up in value is like not good personal finance behavior. And so, no, I wouldn't recommend this. That said, someone could say, well, yeah, just do the 50-year and then just pay it off like a 30 or pay it off like a 15. I'm like, yeah, but, at some point you're just, giving yourself enough rope to hang yourself with. And so I'm not a huge fan. Yeah.
Okay.
That's a saying. So much
It
rope
is.
you can
It
hang
is. I
yourself.
wasn't ready for it. It's got a little
Okay.
dark.
Yeah. And didn't mean to be that context, but yeah. So yeah, I kind of agree with this person that like, the idea isn't you sit there and pay the same thing for 50 years because that's not how people behave. But still, I don't like it as a tool to like,
Right.
get into a bigger home, because you're just basically, it's a tool to become more house poor. I'd rather when someone has a 15-year loan, I'm like, yeah, like go for it. Get that 15-year loan, hold your feet to the fire, get out of debt soon, own that home in cash, put more of your money towards investing after that. That's how you actually build wealth, not by getting into interest-only situations where you're bought too much house and you're just between property insurance, mortgage interest, and property tax. You're just basically treading water your whole life. That's not the idea.
Well, can't argue with that. You did, in fact, have time today, and we appreciate it. On that note, that's all we have time for you today on the Personal Finance Club show. We'll see you next week.
And don't forget to live by the 2 rules of Personal Finance Club. Rule number 1, live below your means. Don't get into 50-year mortgages. And rule number 2, invest early and often. Peace.
The Personal Finance Club show is produced by Jeremy Schneider and Jen Mundia. Music by Esabalu and Homie. Send your questions to podcast@personalfinanceclub.com. The Personal Finance Club show is co-hosted by Jeremy Schneider, who is a co-owner of Nectarine, an SEC-registered investment advisor. The views expressed on this show are those of the hosts and guests and do not necessarily reflect the views of Nectarine. Please refer to hellonectarine.com for all relevant disclosures. This podcast is for informational and educational purposes only and should not be construed as personalized investment advice or a solicitation to buy or sell any security. Listeners should consult their own financial, legal, or tax professionals for advice specific to their situation.